In this market where interest rates are continuing to rise and refinance deals are not as abundant as they used to be, it's now more important than ever to build a purchase-based business. In this six-figure marketing plan, we're going to tell you exactly how to build a six-figure business. And not only that, we're going to tell you the mistakes that loan officers make when trying to build a purchase-based pipeline. And we're going to start right now. Now, before we get into how to build a purchase-based business, it's really important to understand the mistakes that loan officers make when they try to do this that cause them to fail and come short of that six-figure mark. Now, the first mistake is focusing too much on quick wins. Now, quick wins are amazing, obviously, and they do happen in this marketing plan, but focusing only on those quick wins, those jackpots, is going to make you miss a ton of opportunity. For example, when you're building a purchase-based pipeline, there's going to be people who aren't qualified yet that may need a little bit of extra work. There's going to be people who maybe want to wait a little bit longer, and there's going to be people, just like we just talked about, that are qualified and ready to go right now. We're going to go over those categories and how to handle those a little bit later in the video. Another mistake that loan officers make when trying to build a purchase-based business is that they rely on realtors and their referrals too much. Now, when you think about it, a lot of realtors are already working with multiple loan officers, especially the ones that are established and successful. When new real estate agents start the business, those are really the best prospects for loan officers to build a relationship with, but it takes a while for a new real estate agent to get started most of the time, and most of them don't even last in the business. Now, realtors are an important part of the marketing strategy, but relying too much on them and definitely relying only on them really just puts you at the mercy of how they're doing in their business. One of the biggest mistakes that I see loan officers make is they're not generating their own leads. They're always trying to set up these referral partnerships, which again are great, but generating your own leads not only puts you more in control of your business, of your pipeline, but also gives you some leverage because you can now provide more value to your referral partner. And finally, the last mistake that I see loan officers making when building a purchase-based business is they're not appropriately nurturing their leads that they have coming in. And we're going to go over how to appropriately nurture them later in this video. But first, let's go over our strategy in this seven-figure marketing plan. As a loan officer, you really have two main resources that you can invest with. One being time, the other being money. Now, if you have time to invest, you would want to invest that time in what you could call evergreen strategies, or things that are going to essentially send you leads long after you invest that initial amount of time. And once you get money to invest, or if you already have some and you have more money than time, then you'd want to invest that money into marketing that works. So let's get into how to invest your time and how to invest your money. Now, the first and the obvious way to invest your time is networking with real estate agents. Now, remember, when you network with real estate agents, I'm not going to go into a huge in-depth on how to do that because you've probably already heard it all, but remember just to give them value. And a couple of ways that you can give them value is if you are generating your own leads, which I highly suggest you do, you could send them referrals just like you expect them to send you referrals. Then also that real estate agent, a lot of them have a hard time nurturing their database as well, which is another value point that you could offer. You could offer to run a reactivation campaign to their existing database and nurture their database, so that you both could get some value from that. You both could get some deals. You could also invest your time into creating other types of referral partnerships, such as finding an apartment locator in a city that is close to where you're at, or finding a divorce attorney is one of my favorite ones. There's also financial planners and other types of referral relationships that you can set up. One of my favorite ways to invest time is by using that time to create valuable video content that you can put on a platform that's going to continue to generate you leads far after you put in the time to make the video and upload the video. The perfect example of this being YouTube, where you can actually pick up a ton of relocation leads, people that are looking from other states to move to your state. All right, so now what if you don't have a lot of additional time to invest in that kind of stuff, or later on maybe you start doing all of that stuff, investing your time, and you start to get less time, but with less time comes more money, and you can start to buy some of your time back by investing your money into marketing that works. Now, obviously, there's all kinds of different types of marketing that you could do, but for the sake of this video, we're going to chunk it up to just a really high-level overview of the two main types that you would want to do as a loan officer. The first being targeting people who have a high intent. Now, this type of marketing, obviously you're getting a higher quality lead, but you're paying a lot of times a lot more for it because of the quality, because of the intent. They've shown intent to purchase or to refinance or whatever it is that they're doing, to relocate. So that is a higher cost per lead but higher intent, which on the other side you can get a lot lower cost per lead but a lot more volume. And by a lot, I mean ton more leads. And this gives you the opportunity to build a huge purchase-based pipeline that you can nurture over time, and then over time that pipeline will start to exponentially grow, because in month one you're going to get a lot of leads, you're going to get some quick wins in there, but you're going to get some people who need to save a little bit of money, who need to wait, who need to work on their credit a little bit. Month two, same thing, you get some quick wins, but you get a lot of leads that are going to turn into deals later down the road. And then what you find is whenever you hit month 5, 6, and 7, you start to get deals from leads that you generated in month 1, 2, and 3, and your deals start to exponentially grow over time because you're nurturing this entire huge database of leads. Now you may be asking which one of those would be the best to go with, and the answer is it really depends. They're both completely different, and if you can, having both is a really good strategy. You get those high intent leads so you can get some quick wins, and then you're also building a huge massive database with the other strategy so that, you know, in 5 and 6 months you start to pick up a lot more deals. So having both, or it depends on what your goals are, what you want to accomplish in the next 6, 9, 12 months, so on and so forth. Now this may be the most important part of this entire marketing plan. This 6-figure marketing plan is really made or broken here, and that is nurturing all the leads that come in and nurturing your existing database. Your existing database is probably full of people that may be looking to refinance for whatever reason. Even though interest rates are higher, there's still some of those deals that you could get, or better yet, referrals from your past clients, or maybe somebody's selling their home and looking to buy a new home in the next 6 to 12 months. So your existing database could be full of gold, and if you're not nurturing that, you wouldn't even know it. Now when we're working with our loan officers, we like to explain right up front, when you're generating a massive amount of leads, you're going to have different categories of leads that come in. On one side, you're going to have all the leads that are basically crap leads. Might as well delete them from your database, right? Our job is to get as little of those as possible. Sometimes they slip through. On the other end of that spectrum, you have the leads that are qualified and are ready right now, and those turn into pre-approvals, and those can turn into a closed deal in the next 1 to 3 months. But you have this huge section in the middle of people who are either qualified that want to wait a little bit, people who maybe need to save a little bit of money, or people who need to work on their credit a bit. And this is where a lot of loan officers drop the ball, as they're focused on those quick wins like we talked about earlier, and all these leads in the middle, they just kind of forgot about because they're not ready right now, or their credit maybe isn't good enough, or they need to save a little bit of money. But a percentage of all those people will turn into deals. And nurturing all of those people is very important to it wraps up this entire marketing plan. But you don't want to just nurture them in a way that is like, hey, are you ready to buy yet? Hey, are you ready to go yet? Hey, are you ready to apply? There's not any value there. So what we do is we create personalized, segmented nurture campaigns based off of the prospect and what they need to accomplish. For example, say you have somebody who comes into your pipeline and they need to save a little bit of money. Well, we continue to follow up with them, and in our follow-up, we're actively giving tips and guidance on how they can save more money for that down payment. Same thing with credit nurture. We have people that come into the pipeline who maybe need to bump up their credit score by about 20 or 30 points. We put them in a personalized nurture that not only is designed to stay in front of them, but also designed to give them tips and guidance on how they can improve their credit score. Now, by doing this, we increase the amount of people that actually accomplish the goal, right? So we increase the percentage of people who accomplish that goal, and by staying in front of them and sprinkling in call to actions to reach out to you, we increase the amount of those people that reach out to you once they're ready and not to another loan officer. That's one of the things that we do with the loan officers that we work with. One of many things. If you guys don't know, we're an agency. We help mortgage loan officers get 3 to 5 new loans in 90 days. If you want more information on how we do that, go ahead and click the link in the description. I've put it there and it's going to be in the comment for you. But in the meantime, if you're still looking around, looking for some marketing strategies, highly suggest checking out this video right here where we talk about the 3 best marketing strategies for mortgage loan officers. And until then, I'll catch you later.